Hi everyone, today is Tuesday, May the 6th, 2025. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. Very interestingly, I want to show you how these setups work. I'm going to try and do this for all of our things that we are setting up the day before. This is yesterday's formation. Remember, a short can engage at the top of that opening range candlestick formation. Absolutely did. We could have tried it here, but it was a quick snap short into the upward 14 moving average. I've shifted this to the 15-minute. If you were looking at the 5, you would see that the 50 was holding it fairly well. So it was a snapback trade. Also, momentum trending up. So you know that that's a counter trend move. Now, up here at the top of the range, that was the sweet spot for the trade short. And look at what it's done overnight. Interestingly, this is before I moved all the edges. It moved into the 2-day implied volatility that was designed from yesterday. So this confirms the fact that we are using the right formations and we are following what the big algorithms have done. So that's true for all of them. I will note it later, put it up somewhere for us to look at in terms of the images on these tighter time frames so that you can see that this method is really spot on. And no matter what time frame you're using, build it on the 1 hour and then you can pull it down and see what's going on. Just absolutely beautiful trade. Absolutely beautiful. Across the board, a few things blew out. Not if you just stayed with trend, it would have taken you to the places that you wanted to go. That is, gold and oil. But that's neither here nor there. You follow trend first, and then you look for the levels that are going to help you engage. Today, I suspect bounce action is going to give us shorting pressure, but the risk is kind of wide if you just go willy-nilly and try to take it short. We've very hyperextended from the 50. Momentum is sitting in a place where it normally finds buying pressure, but now trend is significantly down. We are already at the implied measured move for the day, right? Now the 2-day move is way down here, but this first implied move here on the E-mini S&P at 5,625, if we'd been short, according to the structure, it would have given us this target at $5,625 with a minor stop at 56.44, where you could have gone half size or decided you were going to re-add to the trade because you were under the 14 simple moving average. For the 15-minute, you would use that 50 and watch the bounce, have it all the way down. What are the opening ranges to watch? $5,664 to $5,673. If we're above that range, we want to watch for a pop that fails. If it doesn't fail and it holds the bottom of that range at 56.64, we've got to shift back into the upside. But this is our first time seeing lower highs and a break of the 50. It tells me that the bounces are shorts in the current environment, which really moves right into my premise where I thought this entire move is retail getting involved, playing algorithmic, getting involved, playing, but big players using bounces to get out of the market. Short covering formations having to chase the bounce out. Okay, here we are taking a look at the NQ next. Again, lower highs. Palantir did not do well, but it is bouncing off of its lows. I'm really happy because I've got some short calls in there. From that perspective, the trend break continues to say, hey, listen, if I'm under the 50 and I'm making lower highs and lower lows, my bounces are going to be sell zones. Here we are. Just like the ES, the NQ has moved into the implied volatility area for the day already. And you'll notice we have stalled out here. 1, 2, 3, 4 hours of the 5 hours sitting in this space. We are stalling out, but momentum remains low. So if you're taking a long here, you've got about 40 points of risk. You might want to try a couple of MNQs instead of just a regular NQ, or keep your stop tight. That's you, okay? So what is the formation? Bounces into 20,000 all the way to 20,030. There's still shorting opportunity. That could make a nice intraday long. But once you get up here, you need to take targets at that space. So I like this area as a potential bounce zone. First target, 19,915. Second target, 20,003. Third target, 20,040 or so. Just ride your stop up if you're only taking a couple of formations. FOMC meeting begins today. Inventory is currently short. We should see a reflexive bounce. If this fade doesn't give us any kind of reflexive bounce, we are going to have ourselves a sell-off. Implied volatility moves for the week put us down at 19,589. And if we recover, per happenstance, we will move into the opening candlestick formation of yesterday that has a target of 20,107. And then the top of that candle gives us the implied vol move to the upside for the day, which is 20,194. I did not make any changes in the YM as we go there. The targets are the same. This is a weekly trade versus an intraday trade. What did we do? We had a double top, still higher high though, but we broke the 50. And so this is a mixed bag, right? We have a higher high yesterday and a higher low, but then we break the 50. So this place looks like the place for a reflexive bounce, 41,000 or so, and then back into the opening range near 41,300, but we could have a stop point at 41,225. Lower edges of the range, 40,905, and then some bigger moves back into the initial breakout down there at 40,772. I suspect this YM holds its structure. Let's go to micro Bitcoin. This is one of the ones that expanded. This one did just fine from yesterday's formation. Here are look at how wide these opening ranges are getting, right? Let's take a look at the form. First of all, congestion. And if I extend this trend line, properties, doesn't it allow us to extend? All right, no cigar. All right, so let's move it, right? So this is a trend line break, very messy trend line break, but this, I don't know what to make of that. Breaks down, does not recover in the least. To me, this looks weak, right? This looks very weak. It looks like bounces or sell zones, but we're pretty far away from that 50. And so I would look for shorting action at the failure on the retest of this 94,000 area. It could bounce to the implied volatility move. It's already broken through that on the day. My thought is that the chains are mispriced in here, so you really actually could go long on the puts and on the call side relative to trend, as long as you wait for these bounces or fades, whichever one you're looking for, either long or short. So edges below, 2-day implied volatility, 93,541, and then, we're back down at the 91,000 area. If we're staring that down, the weekly implied vol move is 91,850. There's no way I would take a short here because every single time it bounced, so there's more of a long here at 94,000, but if it gets to the top of the opening range at about 95,500, you want to get out, right? It's much, much better to get out or to get your stop really, really tight. Okay, let's go to oil. All right, sitting here in oil, this is another one that's just gangbusters, right? This is crazy. The movement here is so incredibly volatile. We have an energy shift, like I mentioned yesterday, Bank of America moving things in energy to overweight. I believe Goldman Sachs also did it. That's pretty interesting to me. And so that could be part of what we're doing, but have a look. Lower low, lower high, and then all of a sudden in the overnight, we have a trend break. Already at the 2-day implied vol number. Matches the low of the opening candlestick formation from 3 days ago. Target. All right. What's the trade? Well, it's a pretty sideways patch, but my thought is this is the top end of the range and it's going to come down back into the initial implied volatility move at 58.08. If it does not, what's the trade? The trade is the pullback. Here's the market structure break on the 1 hour. The pullback into the areas near that market structure break that sends us up into 59.36. This is the weekly vol move that's measured. That's all the way up at 60. I don't think it goes there, but we'll see. All right. Lower edges for oil, $57.25. That's going to be that high opening zone. I don't really think that this chart loses much until, we got to lose $58. And at this juncture, looks like we're trying to make a reversal event. However, this is what happened here, right? Notice, breaks, moves straight up, trend of the 50 is still down, arcs over, and then it rotates. My thought is that oil is going lower, but it's got to really give me a reversal pattern for me to go, okay, I'm going to short. And I kind of like to short right here at $58.87, but not really giving me those opportunities to do that. I got to wait for it. Let's take a look at gold. All right, so we got some very big currency moves. This is, I would say this is a little alarming, but it is what it is. Extreme extension. We've blown through, in 2 days, we've blown through the implied vol move for yesterday, the implied vol move for gold. We blew the 3-day implied vol move for gold yesterday. So today, what are we looking at? Topping formation at around 3,400. As long as we stay below 3,400, that's the 2-day implied volatility move for here in gold, we should easily retest 3,370 and then potentially retest some of these reflexive moves. This is a currency event in my mind. I don't know what's going on here, but it's certainly some kind of currency event. Could we break out? Yes. The next line in the sand is 34.12, and the weekly implied vol move is only, $35 away. That's pretty significant, right? The breakout area, notice it broke the bottom of the range, but the moving average should tell you if I'm taking a short underneath that opening break, I'm going to run into support. And it turned around. It turns out that the bottom of that move, the bottom of that opening range, based on trend, tells me I can buy it. And another savage move up. It retraces more than 50%, but then takes right off and comes right back to the top. That, we're going to see some news on what's going on a little bit later. That is certainly something very interesting. So, also super interesting. These things are working very, very well. Yesterday's chart in the SPY moved into the 2-day vol this morning, just like it would say, hey, it's 2 days. So here we are at the second day. Now we're at the bottom of the opening range. We're under the 50. We've got lower highs. What does this tell you? Well, it tells you that there's a short here. The risk, however, is all the way up to the gap. And that, my friends, is the opening. Hang on. Let's clone this. It is the low of the opening candlestick formation from yesterday. So 562 ideal short for SPY. Could you take the short now? Could it chop you around? Yes, because it's coming into a gap, right? Here's the gap from yesterday, and it popped right to the bottom of that gap. So if it were me, I certainly wouldn't be taking a short at all right here, right? I would just be watching for the bounce, and then take the short, or wait for the collapse and watch for the retest. SPY targets down at the bottom. Weekly implied vol is only 552. Levels for our opening range candlesticks, they're going to come. Let's clone that. No, we don't need to clone it because I've just changed the color. 551. We can walk them down if that happens. I don't know. I think we could be very sideways and stuck in the mud today. Simply because, FOMC meeting starts, and yeah, I have no idea what's going to happen. All right, here we are. Same sort of thing. Take a look. Here is the low of the opening candlestick in the Qs from yesterday. That I anticipate to be actual resistance, 483. This area here is a gap fill event at $480. Could they wick past it and get down into the implied volatility move of $478? Absolutely. Absolutely they could. But it should be a reflexive bounce that takes us up into potentially another lower high after we've made a lower low. That's the definition of trend. Shorting action going to sit right up here. 2-day move, measure 475. Now, just because it says 2-day doesn't mean it's going to take 2 days. It could take it today, just like gold blew out of 3 days of motion. Wow, the market has just absolutely stalled. Okay, so that's it, folks. I'll see you on Fast Markets today. So excited to be back. And, stay cautious. Stay ready. Take care.